This is Chris from thetraderguy.com taking a look at the Forex session in the upcoming December 29th trading session. But as you'll notice, the astute of you will notice that this is not a Forex chart that I have in front of you. It is in fact the light sweet crude contract, which is showing many different things all at the same time. Let me show you a couple different examples of what it could be trying to show. The recent price action has formed a little bit of a downward channel. A lot of people could see that, and that's fairly straightforward. We also see that the 102-ish level or so is resistance. Notice how the candles can't close above that. But on top of that, there is the possibility that this is a bullish flag. Confused yet? Probably. That's okay. What I am looking at, though, is I am looking at the fact that oil is struggling in this area, and two of the three scenarios are bearish. A lot of this run-up was due to the Iranians threatening the Strait of Hormuz and cutting off a lot of the world's crude oil supply in response to the possibility of the EU banning Iranian oil imports. The Saudi Arabians stepped into it on Wednesday and said that they'd be more than willing to increase production, and probably just as important, if not more importantly, the United States Navy Fifth Fleet, which is parked in the Persian Gulf as we speak, said that they will keep the Strait of Hormuz open. The Iranians will not want to start an actual armed conflict with the United States, which they would have absolutely no hope of surviving, especially when you think about the Saudi Arabians being their nemesis in the region and have shown that they have absolutely no qualms about having U.S. soldiers based on their territory. With all of this kind of thrown together and the weak demand globally, the United States driving season has, or driving miles have decreased over the last 8 months in a row. Oil prices were destined to fall, and that is why I support the bearish case right now. Now that we see everything that's going on, I'll take you to the Forex markets and show you how I'm looking at a particular pair in the Forex markets as it relates to oil. In front of you is the Canadian dollar versus the Japanese yen. Now, a lot of people, when they think oil, they think dollar yen, or dollar Canadian, sorry. And that makes sense because oil is priced in dollars. The United States is the largest consumer of oil. Although I think maybe the Chinese did pass us earlier this year, but nonetheless, it's one of the two biggest. And the Canadians, of course, export a lot. But what people don't typically pay attention to is the CAD yen, and the reason for that is probably just it's a smaller market. Not all of the major brokers offer it. It's not that rare to see a broker that, your typical MetaTrader 4 broker that offers 18 pairs, 19 pairs, 20 pairs, whatever, not offer the CAD yen, so it's not one that's talked about much. The spreads aren't bad. Typically the spreads are anywhere from about 3 to 6 pips, so it's not exactly a wildly exotic pair. It is two major currencies cross, so it isn't necessarily a dangerous pair to trade. But what one should think about is the fact that the Canadians are exporters of oils and energy in general, while the Japanese have to import 100% of their oil. They do not produce any oil whatsoever. It is a large economy, so they do consume quite a bit. Having said that, looking at the charts, I see that the 77 level is an area of support and resistance, roughly. And it's a zone. You could probably make a case for 76 to 77 or so. So as I draw these lines, just think of this as one thick area. You can see that with all of this news on Wednesday about the Iranians, this pair has taken a downturn. This will look somewhat similar to the oil chart. As you can imagine, a little bit of a downward channel here. And as you can see, it does tend to move fairly similar to oil. Maybe not tick for tick and day for day, but in general it will. Having said that, I think this may be the area to play it. Am I looking for a massive short? No, I'm looking for a short-term trade. This time of year doesn't offer massive moves, but if the oil markets do continue to fall, this pair should as well. I will be watching to see if the lowest part of the Wednesday range can get broken, and I may perhaps place a short-term smaller trade. If you have any questions or any comments, feel free to get a hold of me at chris@thetraderguy.com or in my free educational forums inside thetraderguy.com. And I hope to hear from you soon, and I will do another one of these videos as I see setups come. Thank you.